it's Michael Saul with the Stock Market Trading Watch List for Tuesday, September 20th, 2011. Let's take a look at what happened on Monday with the indexes and some stocks. Nice size gap down. Didn't quite get the fade here on the SPY. Video's up on the blog, but I don't really talk about what went on. I talk more about what my trading was for the day on Monday. Not the trades in itself, but whatever. Just watch the video. All right. So let's talk about the SPY here, and you can see that we pulled back to the 20 EMA and held on a closing basis. Actually got a nice little push into the close. I thought we were gonna take out the highs and maybe even go green, but we didn't. Now there is a bullish tendency into the FOMC meetings, so I'm still looking for some more upside here. I am still believe that we're in a bear market. I was going to say I'm still a bear, but that doesn't really sound that nice, although I am one. I think we're still in a bear market here. That's my opinion. So I still believe that we're going to go lower. Now, just because there is a tendency for us to go higher into the FOMC meeting doesn't mean we do. So now you can see I drew in this consolidation. You have to be aware in case we do decide to drop out of this. All right, we're gapping down right now. If we open, we'd be gapping down, but we're down about 10.5 points since I'm doing this a little bit after 11 o'clock on Monday. And I'm not doing a million takes of this. That's why it'll be a couple of errors in here, but I'll just correct them. So I'm watching us, though, for early weakness on Tuesday to try to push higher into that announcement on Wednesday. We got the 50-day moving average as well coming down, and like I've been saying, I think the 50-day moving average needs to be respected, but my personal opinion says that we're going to break out above this high here. All right, and I still think we're going to roll on over after that, but that's why I think we're going short term. And my opinions don't mean much, and if you watch this video, you'll see why, because my opinion of the market on Monday was completely wrong. All right, and you know what? I say it was completely wrong, but I was right early on. And it's funny, when I was right, okay, when my opinion was the correct one, that's when I actually had the losing trade. And when my opinion was not what the market was doing, but yet I traded what I saw on the charts, I wound up making the money back and actually grinding out a small meal money, I call it. Enough for a nice dinner at a restaurant. That's it. But like I said, check out the video, the S&P video on the blog. So the NASDAQ 100 did wind up closing green. Okay, it gapped down and it fuddled around. It didn't come back to the 50-day quite, but it did close just a little bit higher than what we did Friday, but still above that 200-day moving average. All right. Somebody wanted me to take a look at the NASDAQ 100, the NASDAQ composite. Sorry, you can see it's lagging. Right, the NASDAQ 100 is the leader of the two. So I don't really look at the composite. I usually look at the NASDAQ 100 only. Here's the Russell. Yeah, just pulled in, and I mean, it kind of held here, but we could draw some lines in here as well. There we go. And there you go. Okay, a little bit better. I'm kind of trying to force fit the line. Actually, it doesn't. Looks pretty symmetrical. So once again, see if it'll push out, but it can also be aware that it could drop. Semiconductors, didn't quite make it to the 50-day. Watching that and these moving averages coming up as potential support. Banks, yeah, just kind of drifting. Brokers, cyclicals. Okay, a lot of these are looking the same. Biotechs, if I get the symbol correct. Okay, looks like a channel. Healthcare. Just kind of hanging at that 200-day moving average. Drugs. I mean, there's nothing really to look here and say, oh, now I see it. You know, not for me at least. Oil services. Look at OIH as well. Like the same chart pattern. GLD. Still looks weak. Watch that 50-day moving average. Silver. Still underperforming. Gold overall. Just kind of chopping around here. Guess we'll get rid of this. Make sure we'll save the workspace so it doesn't reappear. Hang on. Okay, here we go. All right. Let's take a look at some stocks. Apple all-time highs. Steve Jobs resignation. The mini coil. The break. And then the break. All right. We talked about it yesterday, that it was suggested that it goes to at least a test of the highs. And then we have this 418.63. So watch that. All right, let's take a look at Amazon. Amazon modeled for a digestion day on Monday. I mean, it was more of a bullish day. I mean, it dipped early, but closed pretty well at new highs. Baidu, okay, had this consolidation. It wound up breaking down below it, but it gapped right below it. I don't know, if you took it right off the open on the break, it was worth a couple points, but I don't know, the gap down below it, I don't like taking gap downs like that. I like to see it trigger off, open inside this bar, and then trigger off. So, Cena, okay, still in that same pattern. I mean, this was a 3-bar pullback. Now it looks like a potential 4-bar pullback, right? And it held the 20 EMA, it held the 50-day. So this one should be watched. All right, let's look at Goldman. We skipped that one yesterday. Could be a high or low in place. Here's research in motion. All right, was looking nice here. This was a nice trade, and then boom, earnings stink. So now we want to see if it breaks those lows of 2160. Watch for sub 20 on this one. Okay, let's look at John Deere again. Still the same. Caterpillar. Come on, there we go. Potash. Yeah, not looking good. Now below the 200-day moving average, rather. A big old mess. Messy over here. Let's look at O'Reilly Automotive. Continuing to move higher here. Let's look at Ren. Ouch. Yeah. So much for this one, huh? Just ugliness. Super Guru hyping the crap out of this on the day it opened, and it's at new lows. Oh, well. Can't win them all, I guess. Sometimes you can't win any. Google. Watch that 50-day at 555 and change. It's at 86 or 66. Okay, so watch that. So let's see what happens with the FOMC announcement. Like I said, there's a bullish tendency ahead of the announcement or into the announcement. Plus, there's a lot of talk that Bernanke is going to unveil QE3. So that could have some short-term volatility tied with it. And have a great trading day on Tuesday. I'll talk to everybody again on Wednesday.